Good morning, eStudents. We are going to learn accountancy in a new way. eStudents are different, so we are going to learn it in a different way. The fundamentals of accounting in a different way. The eStudents way of learning. Are you ready? When your banker says, I will credit your account, what does it mean? What do you understand by that? Sometimes your banker says, I will debit your account. Then you get confused. Why? Because you don't know the very basics of accounting. And this class is meant to teach you the basics of accounting, the fundamentals of accounting. And we are introducing credit girls. Accounts is the language of business. Many terms are there. For the beginners, terrifying terms like debit, credit, double entry, then the usual words cash, bank, then the new terms revenue, expenses, assets, liabilities, and after all these terms, you get confused with this subject, and we are trying to eliminate all the preliminary terrors in accounting in one class. Today, let me ask you a very simple question. What is debit? What is credit? You have been studying accountancy for many years. If somebody asks you, what is debit? What is credit? What is your answer? Do you know the answer? The question may be very simple, but my question is, do you know the answer? Under the double entry system, every business transaction is recorded in two accounts. Double means two. Double entry, two accounts. We are making entry in two accounts. One account will receive a debit entry. It means the amount will be entered on the left side of that account. Another account will receive a credit entry. That means the amount will be entered on the right side of that account. Left debit, right credit, left right. To debit an account means to enter an amount on the left side of the account. To credit an account means to enter an amount on the right side of an account. Tip 1. Say with me. Are you ready? Debit means left. Debit means left. Credit means right. Debit means left. Credit means right. Left, right. Debit, credit. Look at the picture. Debit means left. Credit means right. So what is our tip 1 in learning the fundamentals of accounting? Debit, you imagine your left hand. Debit means left. Credit, you think about your right hand. Credit means right. Left, right. Left, right. Debit, credit. Debit, credit. The debits and credits will be entered in accounts. Let me ask you one simple question. What is an account? You have been learning accountancy for many years. But do you know what is an account? If somebody asks you, what is an account? Then do you know the answer? It's a very simple question, but many students do not know the meaning of an account. The transactions of similar nature are put together in an account. An account is a place where transactions of similar nature are put together. The key words are transactions of similar nature. Similar nature. Similar accounts are grouped as assets, liabilities, capital, revenues, expenses, gains, and losses. Similar accounts are grouped. Transactions of similar nature are put together in an account, and similar accounts are grouped as assets, liabilities, capital, revenues, expenses, gains, and losses. Look at these accounts. Deal accounts, drawings, expenses, assets, losses. D. Drawings. E. Expenses. A. Assets. L. Losses. These accounts are increased with a debit. What does it mean? If you debit that account, the amount will be increased. Drawings account. You debit drawings account, then the total drawings will be more. Expenses. You debit expenses account, then the expenses will be increased. Assets account. Debit. Increased. Losses. Losses also increase. These accounts are called deal accounts. Deal accounts are increased with a debit. Now we have girls. Girls. G. Gains. I. Incomes. R. Revenues. L. Liabilities. S. Sales. Girls accounts. Gains accounts. Incomes accounts. Revenues. Liabilities. Sales. Girls accounts are increased with a credit. What do you mean by that? If you debit deals accounts, they are increased. But girls accounts are increased with a credit. Gains account. If you credit gains accounts, total gains will be increased. If you credit income accounts, total income will be more. Revenues. Credit more. Liabilities. You credit liabilities account, then your total liabilities will be increased. Sales account. You credit sales account, then sales will be increased. To decrease an account, you do the opposite of what was done to increase the account. For example, sales account is increased with a credit, therefore it is decreased with a debit. So what is our tip 2? Deal accounts are increased with a debit. Girls accounts are increased with a credit. Say with me. Deal accounts are increased with a debit. Hi. Deal accounts are increased with a debit. Girls accounts are increased with a credit. Credit girls. Now you got it. Look at a T account. Normal balance is debit. Drawings, debit balance. Expenses, debit balance. Assets, losses, debit balance. And girls, gains, credit balance. Income, credit balance. Revenues, credit. Liabilities, credit balance. Sales, credit balance. In the general ledger, you generally find a debit or credit balance in the above group of accounts. Deals accounts, debit balance. Girls accounts, credit balance. Then cash is an asset. What is tip 3? Tip 3, when cash is received, debit cash. When cash is paid out, credit cash. See, look at the picture. Cash received left. Left means credit or debit. Debit. When cash is received, debit cash. When cash is paid out, credit cash. Say with me. When cash is received, when cash is received, debit cash. When cash is paid out, credit cash. When cash is received, debit cash. When cash is paid out, credit cash. What about the other account? When cash account is debited, another account is credited. When cash account is credited, another account is debited. When cash account is debited, another account is credited. When cash account is credited, another account is debited. Revenues and gains are recorded in accounts such as sales, rent received, interest received, commission received, profit on sale of assets. These accounts normally have credit balances that are increased with a credit entry. The accounts like sales returns, sales allowances, and sales discounts have debit balances because they are reductions to sales. So tip 4, think credit when revenue is earned. Think credit when revenue is earned. Say with me. Think credit. Hi. Think credit when revenue is earned. Think credit when revenue is earned. Think credit when revenue is earned. Expenses and losses are recorded in accounts such as purchases, rent paid, interest paid, commission paid, loss on sale of assets. These accounts normally have debit balances that are increased with a debit entry. The accounts like purchase returns have credit balance because it is reduction to purchases. So tip 5, think debit when expenses are incurred. Say with me. Think debit when expenses are incurred. Think debit. Think debit when expenses are incurred. Think debit when expenses are incurred. Think debit when expenses are incurred. When your banker say, I will credit your account, it means the transaction will either increase your bank deposit or decrease your bank loan. When your banker say, I will debit your account. It means the transaction will either decrease your bank deposit or increase your bank loan. Tip 6. When your banker credits your account, you should debit bank account. When your banker credits your account, you should debit bank account. When your banker debits your account, you should credit bank account. So what will you do when your banker debits your account? You should credit bank account. When your banker credits your account, you should debit bank account. If your bank account is an asset account, it increases. If your bank account is an asset account, it increases when your banker credits your account. If your bank account is a liability account, it decreases when your banker credits your account. Have you got it? If your bank account is an asset account, it increases when your banker credits your account. If your bank account is a liability account, it decreases when your banker credits your account.
Hi, are you a chartered accountancy student preparing for CPT examinations or intermediate examinations? You can join eStudents now. eStudents, the best friend of smart students. eStudents arranges two types of classes, online classes and classroom learning. Which is your favorite? If you want to attend online classes, you can have eStudents online classes. If you are so particular about classroom classes, you can come to eStudents Todupuzha. Are you interested in joining eStudents online classes? You can follow us on Facebook. If you want to attend our classroom sessions, you can come to eStudents classroom. We welcome all of you to attend our classes at eStudents Todupuzha.